Those 33 million small pass-through businesses employ more than 68 million workers. And so you might think the economic impact of permanently extending the 199 cap A deduction is really quite big, and it is. And the reason for that is there's a whole lot of economic activity at small pass-through businesses.
The Small Business Rundown is the official podcast of the National Federation of Independent Business, the member-driven voice of small business. NFIB and our members advocate to keep America's small businesses strong and independent in Washington, D.C., all 50 states, and the nation's courts.
Welcome to the Small Business Rundown, a biweekly podcast with information on independent businesses' victories and challenges in Washington, D.C. and state capitals. I'm Adam Temple, NFIB Senior Vice President of Advocacy. NFIB's top federal advocacy priority is stopping a massive tax hike on small business by making the 20% small business tax deduction permanent. This tax policy affects 9 out of 10 small businesses, and last month, NFIB announced a new report by EY on the positive economic impact if Congress were to protect small businesses from this tax hike. Holly Wade, the executive director of NFIB's Research Center, recently discussed the report with the head of the team at EY that conducted the analysis. Brandon Pizzola is a partner with the Quantitative Economics and Statistics practice at EY.
Hi, Brandon. Thank you for joining me to explain the findings of the Small Business Tax Deduction economic analysis. But before we dive in, Brandon, I'll start with some context of NFIB's years of research around tax policy. Small Business Problems and Priorities, a survey that we established in 1981 and is published every 4 years, we ask small business owners to evaluate 75 potential issues in operating their business. We rank those issues based on results, and not surprisingly, a lot of tax-related issues are at the top of the list as some of the most burdensome issues in operating their business. And federal taxes on business income consistently land in the top 5. This year at number 4, with a quarter of our members saying it's a critical issue. Because it's a top-ranked issue of importance, we have periodically surveyed small business owners on it specifically to see how they manage changes in the federal tax code. The 2017 tax survey found that the Tax Cut and Jobs Act that was passed in the Trump administration was a huge help for most small businesses in lowering their federal tax bill and allowing more of them to invest in their business. But many of those provisions are set to expire at the end of 2025, so we wanted to ask how small business owners would respond if their taxes increased in the next Congress and administration if they don't make those provisions permanent. Not surprising, owners said that they'd have to raise prices, postpone or cancel investment, and freeze wages or reduce employee benefits, to name a few. So we know all that, but we wanted to know about the benefits of extending the most important of those provisions, the 20% small business deduction. And that's where you, Brandon, and EY came into the picture for us with your report. Looking at the benefits of the deduction, since we do know how small business will respond if tax provisions aren't made permanent, we wanted to get a better understanding of what it looked like for the benefits of the provision if it was extended or made permanent going forward. So, Brandon, can you talk to us about the findings and how your team goes about conducting the analysis like this?
Sure, happy to. I'll talk about what we did, how we did it, and what were the results. So in terms of what we did, we estimated what is the macroeconomic impact of permanently extending the Section 199 Cap A deduction, and we did that estimate on just for small businesses. So the Section 199 Cap A deduction, that's that 20% pass-through deduction you just mentioned. But to just give a little bit of context, first, what is a pass-through business? It's worth noting that when there's a business that's a sole proprietorship, a partnership, an S corporation, those generally aren't taxed at the entity level. What happens is the entity's income, the deductions, the credits, the losses, they're all passed on to the business owner, and they pay tax on their individual income tax return. And so these people wouldn't be paying the 21% corporate income tax rate. They'd be paying whatever their individual income tax rate is, which can be as high as 37%. And so in the tax code, there's that 199 Cap A deduction that creates a 20% deduction for pass-through income. So basically, it will reduce your tax rate by 20%, subject to limitations. This provision was passed as part of the TCJA, as Holly mentioned, and it sunsets at the end of 2025. So starting in 2026, this deduction will go away unless there's legislative action. So in terms of how we did it, we did that in two parts. First, we modeled what is the tax incentive effect, and then we used that modeling as an input to the EY macroeconomic model, or in-house macro model. What are the incentive effects? So the 199 cap A deduction, as I mentioned, is a 20% deduction for pass-through income, and there's basically two buckets of incentive effects there. One, it reduces the cost of capital for small pass-through businesses. Basically, the return on investment goes up, so pass-through businesses invest more. When they invest more, there's more capital. When there's more capital per worker, productivity goes up, and then the overall productive capacity of the economy increases, GDP increases. It's also worth noting that some pass-through income is what economists like to call labor income versus capital income. So if you're, say, a pass-through business owner, if you make an investment and earn a return on that investment, that's referred to as capital income. And some of your income is you're working at your business, that's your labor income. And it's worth noting that when you reduce marginal tax rates for self-employed workers, generally folks work more hours or enter the labor force. So essentially, we have those two tax incentive effects. The people are going to work more and the people are going to invest more. So once we've modeled that, we put it into the EY macroeconomic model. Again, that's our in-house macro model. It has very detailed modeling of the U.S. economy. Has a corporate sector versus a pass-through sector. It has different industries, different goods and services, different types of households. It's similar to some of the modeling that would be done at the Congressional Budget Office or Joint Committee on Taxation or the Treasury Department. It's broadly similar. There are different types of macro models, but this is one very frequently used for tax policy analysis. And then finally, probably the headline result, probably what you care about most. What were the results? The overall estimate, we did two headline results. One, what is the impact on jobs for the U.S. economy? And two, what is the impact on GDP? For jobs, we measured as something called a job equivalent, which holistically measures the impact on workers. Basically includes both one, there'll be fewer workers, and two, workers are going to be paid less. And so this holistic measure captures both of those effects. Overall, we estimated that permanent extension of 199 Cap A will increase U.S. jobs by 1.2 million on average in each of the first 10 years. And these are at small businesses, and this will grow over time and get to 2.4 million after 10 years. In terms of GDP, there'll be on average $75 billion more GDP at small businesses in each of the first 10 years, and that'll grow over time, eventually getting to about $150 billion of more GDP at small businesses thereafter.
Thank you so much for that. Very helpful to kind of wrap our head around the benefits of this deduction. Was there anything in the report that stood out to you that was unexpected?
So as part of the modeling, we had to basically calibrate the model to look like the U.S. economy. And one thing that's just worth emphasizing was, I don't know if I call it unexpected, but what was stood out to me was there's a whole lot of economic activity at small pass-through businesses in the U.S. economy. So if you look at small businesses, just in general, pass-through or not, they comprise over 99% of all businesses in the United States. There's about 34.3 million small businesses in the United States, and 96% of these, or 33 million, are small pass-through businesses, and those 33 million small pass-through businesses employ more than 68 million workers. And so you might think the economic impact of permanently extending the 199 Cap A deduction is really quite big, and it is. And the reason for that is there's a whole lot of economic activity at small pass-through businesses.
Absolutely. And those are certainly the takeaways that, we hope that readers of the report will better understand, is this dynamic nature of the small business sector, what this means for them in being able to retain their current employees, to hire if they're looking to fill open positions, and all of the economic activity and GDP growth that is from the small business sector. Is there anything else that you would like to add before we wrap up?
I think one thing I think would be worth highlighting for listeners is just understanding the overall policy context, knowing that both former President Trump and Vice President Harris have proposed very significant tax policy changes. The TCJA, most of the individual income tax provisions are scheduled to expire at the end of 2025, and extending them is projected to cost $4 trillion. And then even if there's zero legislative action, even if we don't even think about new tax policy or other changes, years. U.S. deficits are averaging $2 trillion over the next decade. And so there's a lot of forthcoming changes in tax policy. And just because I'm an economist and this is what I say, I think it's important to do economic analyses of these policies. There's always going to be policy trade-offs. If you do one policy, the money you spend on that, you necessarily can't spend on something else. And so it's important to do modeling of this to make good decisions.
I couldn't agree with you more. The tax policies and better understanding what they mean to small businesses, to the broader economy are hugely important. Brandon, thank you so much for taking the time to talk with us today about this new report.
Thank you.
That deep dive with Brandon really highlights on a broad scale how the single federal tax policy would affect America's millions of small businesses, their employees, and their communities. To illustrate the millions of jobs and billions in GDP nationwide, next we'll hear from a few individual small business owners who explain specifically how the small business deduction has empowered their small business. Last month, NFIB members came to Capitol Hill for NFIB's Small Business Deduction Summit to advocate on this issue with their legislators in Washington, D.C. During a news conference with the media, they explained in their own words the positive impact this 20% deduction has had on their business. You'll hear from Beth Booth, owner of Spaces Renewed in California, Neil Abramson, owner of ECI Stores in New England, Candace Price, co-owner of Home Team Auto Sales in Nebraska, and Michael Irvin, owner of Coal River Coffee Company in West Virginia.
My name is Beth Booth. I'm from San Diego, California. My husband and I own a design build company, Spaces Renewed, also in the home building industry. In 2017, when the tax cut bill came, we finally saw growth at a level that we could actually invest in the business that we had done so much for in the past. We were able to hire designers and architects. We bought trailers and trucks. We invested hundreds of thousands of dollars a month in the local economy. We were renters for over a decade, and we were able to actually purchase those buildings that we had rented. We then did a massive TI for our tenants there, and were able to provide safe, beautiful spaces to work and live out of.
I am Neil Abramson with ECI Stores from Leominster, Massachusetts. We're a chain of consignment stores with our flagship store, Cutie Patooties, started in 1998 by my wife and I. We have many, many long-term employees, and now they have that certainty, and they've watched their savings grow with a company match that we're able to do because of the deduction. We've also been able to grow our store footprint, invest in our infrastructure so that we remain relevant to our community. New flooring, new lighting, new fixtures, making a greater environment not only for our customers but for our team, because it's all about community. This investment is important.
My name is Candace Price. I'm the owner of Home Team Auto Sales in Omaha, Nebraska, along with my business partner, Ron Devers. The 20% small business tax deduction has enabled us to be able to grow our business over these few years while we sacrificed. It's enabled us to expand. We were able to purchase the building next door in that expansion. It's allowed us to buy equipment, and now it's enabling us to be able to hire.
My name is Michael Irvin. I'm the owner of Coal River Coffee Company in St. Albans, West Virginia, along with my wife, Rachel. We've taken the tax savings from our small business and put them right back into the community. We've reinvested in our coffee shop. We've hired more staff.
Those are just a few of the perspectives that small business owners bring to this advocacy effort, and there are millions more like them. If you're a small business owner, you can help amplify this effort with lawmakers in Washington using the link in today's show notes to customize an email to your U.S. senators and representatives. And if you're not sure about your small business deduction, you can start by checking out line 13 of your federal 1040 tax form. Looking ahead to future podcast episodes, we'll be answering questions from listeners. So if there's anything you'd like us to cover, send us an email at podcast@nfib.org. Now I'd like to thank you, the listeners, for joining us on today's Small Business Rundown. We'll be back every 2 weeks bringing you news and analysis from Washington, D.C. and state capitals so that you, whether you're a business owner or a supporter of one, can continue to blaze a trail.
The Small Business Rundown is brought to you by NFIB, the voice of small business. You can find us at nfib.com and on Twitter, Facebook, Instagram, and LinkedIn.